All right, let's talk about why you may be scared to invest in the stock market. There's three real reasons I see why someone would be scared to invest in the stock market. The first reason would be you simply do not understand how the stock market works, and that's a reasonable thing to be fearful of. You should never invest in the stock market if you're unsure of one, what you're investing in, two, why you're investing in what you're investing in, and three, a general understanding of what impacts the investments that you make. Another reason you might be fearful of the stock market is you simply have too many choices. So, there's a variety of things you can invest in. You can invest in mutual funds, you can invest in individual stocks, you can invest in bonds, you can invest in real estate investment trusts, and that's a lot for the newbie investor to process, and it takes time to learn about each of those investments. So what I recommend is start with something easy. Learn about investing in index funds. They're fairly easy to understand. They give you a level of diversification. You do not need a lot of money to invest at one time. So index funds are a great way to slowly get into the stock market and not have to dive right in and learn about individual companies or complex investments. Another thing that you can do is invest in something that used to be called paper trading. So back in the day, before the internet was widespread, oftentimes somebody that was learning how to invest would get the stock quotes in the daily newspaper. So basically what you would do is when you researched stocks or mutual funds, you would do something called paper trading. So you would buy an imaginary position in a fund or a stock, and you would jot that down in a notebook, and that was your buy. And then you would basically be working with fictional dollars, and you would basically create an account that was completely fictional, but it allowed you to practice and learn how you react to these investments. These days, there are numerous websites you can use that give you a fictional amount of money that you take, and you can do trades on actual stocks, and it will keep track of the buy price, the sell price, dividends, things like that. So it makes it super easy. And like I said, it's completely fictional in the respect that you're not using real money. And this is a great way to basically invest without actually investing. There's no money at risk. You can't make money because obviously it's not real money, but it gives you an idea of how to research, how to, your buying habits, your selling habits. You basically treat this account like it's real. The third reason that you may be scared to invest is you don't have a lot of money to risk. And that's a valid concern. You should always have money in a safe bank account or CD, and that's your emergency fund. That should be anywhere from 3 to 6 months of your expenses. This ensures that you not only, in case of an emergency, have some money that you can easily access, but you're not risking this money of losing it. So if you just took all your money, say whatever you had, whether it's $10,000 or $100,000, you took all that money and dumped it in the stock market, and the next day the stock market tanks, you're going to be scared. You're probably going to panic, and you're going to sell it right away. And now compound that with what happens if that same scenario happens, but you also lose your job. Well, then you have the ultimate worst case scenario, because all your money's tied up, it went down, and you currently do not have a job. So by having that 3 to 6 month cushion, it allows you to not panic when you do invest whatever is on top of that cushion. You invest that money, you have time to ride out downturns in the market. You have time to basically not worry about your investments. So to summarize and to kind of give you an idea of what you need to do to become less fearful of the stock market. 1, do a lot of reading. Read the Wall Street Journal. Read books on specific areas of investing. Get a basic understanding, a well-rounded understanding of the different types of investments. And then after you get that well-rounded general knowledge, focus on one area that you're comfortable with. That may be a specific sector of the market. So say you work for a bank and you want to invest in single stocks. Well, there you go. You understand banks because you work for a bank. So become an expert on banking and financial stocks and do all you can to research those stocks and build an understanding of what makes those stocks go up and down and when is a good time to buy banking stocks. Now that doesn't mean run out and buy banking stocks right away. You may want to, if the market isn't right and banking stocks are flying and they're high, it may not be a good time to buy. But by doing that research, you will understand when that time is right to buy. The second thing you can do is do the paper trading as we talked. Invest in index funds. So index funds take a lot of the fear out of it. They invest, say it's a S&P 500 index fund, which is simply an index fund that covers the top 500 largest companies in the US. Those funds are well diversified. They cover a variety of industries. And if you have any questions, feel free to comment in the comments below. I'll be sure to answer those questions. And be sure to like the video and subscribe.